Wraps up, the world's largest companies are increasingly turning to a financial product to offset their environmental footprints. Voluntary carbon credits. It's a hot market, hitting all-time highs in volume and on track to be worth over $1 billion this year. Now, a carbon credit is a kind of permit that represents 1 ton of carbon dioxide removed from the atmosphere. They can be purchased to make up for carbon dioxide emissions that come from industrial production and operations. And as ESG becomes an increasingly powerful driver, this market is set for explosive growth. According to McKinsey, the voluntary carbon market could grow over 100-fold by 2050. Voluntary carbon markets have already posted an over 60% increase in value from last year. So what are the investment opportunities here and the best ways to get exposure to this booming market? Let's break it down with LIONEL KAMBEITZ, Executive Chairman of Delta Cleantech, one of the growing players in the carbon capture and credit space. LIONEL, good to have you here on KITCO.
Well, thank you, Michelle, and it's very good to be with you.
All right, so LIONEL, let's start off with the big picture here, a general overview of the carbon credit market. There's the voluntary market, which I just touched on, and then there's also something called the involuntary or the compliance market, the cap and trade markets, and those have been around for over 20 years, in fact. So give us the background here.
Indeed. It did start with the compliance market, Michelle. In fact, the EU ETS around 2004 and 2005, the European Trading Union was beginning to trade these compliance credits. And this is the beginning of the entire market. So ultimately, the compliance credits today are traded on about 29 or 30 different emissions trading platforms. The three biggest being the EU ETS, of course, running out of London, and then we have the WCI, which is the California and Quebec Western group, and then we have the RGGI group, which is a lot of the Northeast United States that have all band together to create their own trading platform as well. So this is how it began. It began with compliance that was really based on government-approved credits that were ultimately to be used against the industries that the government was indeed putting punitive taxation against. To certain industries they selected, then there was a government-approved credit to be able to offset that.
Right. So this issue of cap and trade has been around since 1997 with the Kyoto Protocol, but didn't really take off and also hit a bit of a speed bump after the financial crisis. But more importantly, perhaps, is the fact that we now have ESG as a driver for the growing voluntary market, where a company or an individual, for that matter, can help balance his or hers or its carbon footprint by funding environmental projects that then reduce greenhouse gases in the atmosphere. Bill Gates, for one, is a big player in this market. And one carbon offset credit supposedly equals 1 metric ton of carbon dioxide or a comparable amount of other greenhouse gases that are then removed from the air. So explain how the voluntary carbon credit market works.
Yeah, I like calling that market to another name. I call it a carbon offset market. We'll call it a voluntary credit. Let's call it a carbon offset market. And these are a variety of different mechanisms that, for example, offsets that trade on a compliance market are created mechanisms, and they're governed by a variety of climate treaties. They're administered by international institutions. There's clean development mechanisms or joint implementation projects that are involved. So on the voluntary markets, the vast majority of the projects follow the rules and procedures set out by independent third parties, but such as Gold Standard or the Verified Carbon Standard. So together, about 80% of the offsets in the voluntary market are governed by those. But we have to recall the voluntary market still trades in the compliance market trading systems, but they are offset credits that corporations who wish to work their way towards their net zero reduction or their net reduction compliance objectives are able to purchase and acquire. And you know, Michelle, some of the controversy or the lack of understanding, the hard to understand, is the fact that these voluntary credits may have different meanings in different jurisdictions in terms of how they can be used.
All right, so let's simplify this a little bit further. You can have an originator who, for example, plants a forest. That's good for the environment. That creates a carbon offset credit. And then that can be sold to a company that wants to reduce its carbon footprint, but is still emitting, still creating pollution through its operations, but wants to be more ESG compliant. And then they can purchase this carbon credit, or then a speculator can step in and buy that credit, expecting it to increase in value, and then sell it at a later stage to a corporation that wants to be ESG compliant. Is that basically how this works?
That's exactly how it works. It's an opportunity. Now, will all jurisdictions accept the protocol of deforestation or planting a forest? Right. That's really what has to be established. But
so give us some of the examples of how carbon offset credits are created.
Well, carbon offset credits are created through agriculture, which no-till agriculture creates a tremendous amount of carbon that is sequestered when the plant grows and it's put in the ground. That's an exceptional way to create those. There's carbon farming, where people are planting crops. For example, hemp crops will sequester 5 tons more carbon per acre than perhaps other crops will sequester. You'd mentioned deforestation and forestation in terms of that, creating that balance. There's emissions that would normally occur that have now been offset with an investment or a process. They've been offset now to reduce the emissions that would normally occur. That becomes a voluntary carbon offset.
Okay, and what is driving this? Is it largely organizations wanting to be ESG compliant? So saying, okay, I don't feel so bad about the fact that I've got 20,000 delivery trucks out there, for example, because I've just paid for an agriculture credit offset production to be maintained.
Michelle, yes, many very responsible corporations want to go to reduction or net zero, of course, by 2030, 2040, 2050. Some business organizations just don't have an opportunity to install technology to be able to do their own reduction as aggressively as their ESG internal governance objectives are. So they have to go out and buy those. And there's a good example. If you just can't get those delivery trucks with a lower footprint than you have, how are you going to continue to lower the carbon footprint of your entire company? You have to go to the voluntary or the offset markets and acquire those.
All right, so break it down, this whole chain, if you will, from the originators to the aggregators to potentially the retail speculators.
Very much so. The heart of the matter is always the originator. It's a matter of who's originating the credits and what's the fidelity of the credit. The high fidelity credits tend to be associated originally with the compliance market because the government has approved them and they can be used as an offset against taxation. But there's many high fidelity credits, high value credits that are emerging in the voluntary market, and they're originated at the originator level, which would be at the farm gate, at the forestry gate, at the mining gate, at the aggregates and the concrete industry are good examples of that. So they're originating that credit. They've made an investment. That investment has created an ability to lower or reduce emissions, capture carbon dioxide, or something that is lowering their emissions. That investment's been made. We then go to an aggregator, and an aggregator typically will go to an industry and have good expertise within an industry, and that corporation will move along and collect a variety of these carbon credits and move them into pretty blocks. It's nice to be able to trade blocks and arbitrage blocks of carbon credits, and it creates more fungibility if you can create a block to be able to trade into the market. And then those are sold through the 29 plus markets that are available around the world, and they are also sold directly. The aggregators will sell directly to the end corporation who wants to lower its footprint.
All right, so back to the forest or tree planting example. I plant some trees, I thereby create an offset credit. I can then sell that on the market, and then companies can buy that from me, allowing them to reduce their carbon footprint and perhaps continue operations that are not as environmentally friendly, but still maintain some ESG compliance because they've now purchased a carbon credit. And then I have speculators who can take a look at this market and say, hey, I think the price of these carbon credits is going to appreciate, and then sort of use that intel or that instinct to trade on these markets. Is that correct?
That's absolutely right. The ability to develop that, you've planted the tree, the ability to develop that carbon credit and move that through to the end user. And then, of course, there's going to be many other protocols that we're going to have to determine whether they're bona fide voluntary credits. The validation of a credit to determine if it's what I like to call high fidelity, that's really going to be where some of the magic's going to be required, from government to government, from organization to organization, and from what certain corporations themselves will accept as being enough fidelity in the credit to be able to be utilized with integrity to lower their carbon footprint.
Well, we know there's demand because, as we mentioned, the voluntary carbon markets have already posted an over 60% increase in value year over year. But to your point, who is regulating the space? Who is now validating the quality and value of the originator's carbon credit offset?
The answer is many. There are many validating and many certification organizations that are out doing that. So perhaps more importantly, who is validating the validators would be an interesting question. When we think to it, it would be an interesting question. What agency that we would trust would govern the protocols of the validators?
And there's currently no governmental agency that has oversight over this, not the EPA, for example?
Well, there is on the compliance market, because the government on the compliance market, of course, that's how it's occurring. But on the voluntary market, it needs room. It needs the room to breathe that it has right now. It needs to have that flexibility to determine if that tree that you planted, Michelle, was going to qualify all the way through. Who's going to qualify it for you, and is that going to be a tradable credit? Now, in the last round, the voluntary credits were substantially discounted to the compliance credits because there was questionable fidelity. But that's where some of the price depression came in a voluntary credit versus a compliance credit in the past round, 2007, 8, and 9. So I think we're going to see a lot of that as well. When we aggregate credits, we're going to see pricing based on fidelity and the quality.
Well, give us an indication of price points. What does a carbon offset credit go for?
You know, you're not going to like my answer because you're going to think I'm a politician.
They vary.
Yes, absolutely. It's remarkable. There are so many emerging offset new origination points that are true origination, where somebody has developed a protocol and made an investment in a process that has reduced the carbon footprint. Now, that has to be taken through, and some of those trade for a fraction of what a
But give us a ballpark here. Give us a ballpark of more or less the price range.
Oh, if I said 2 to 50, you would think I'm a real politician. but truly, it truly is. There's going to be voluntary offsets that are going to be priced in the $2 and $3 a ton range to begin with. As they gain fidelity, they themselves may be worth more, and they will also track the compliance market up. So there's a chance for two opportunities in arbitrage to be able to perhaps buy carbon credits that are newer and have less fidelity, recognized fidelity. And then, of course, there's the general supply demand of where carbon credits are simply going to go up in value because they are required. So there's an opportunity for double arbitrage there, Michelle.
All right, well, let's circle back to Delta Clean Tech, which of course is your company. And you have technology and equipment that actually captures the carbon dioxide from smokestacks and other sources. And then you create carbon credits from that action, and then you trade those carbon credits. So what does the price of a Delta Cleantech carbon credit go for?
Well, they would trade on the EUTS, and whether it's 40 or 50 or $60 a ton, whatever that is. And they are a high carbon capture credits are a high fidelity carbon credit. So, and they're recognized by government, most governments who have the punitive taxation in effect. So they really are in the same qualification round as a compliance. We also are involved in we believe that carbon credit origination is where we belong, and that's really being the technologies that will produce the carbon credit, carbon CO2 capture, number one, methane destruction, all the methane in the world that is coming off of these massive landfills. Methane is, as you know, is 6 times more harmful to the environment for climate change than CO2 is. So there are methane destruction carbon credits being produced that we produce moving forward. There are agricultural carbon credits that we originate as well and bring those together because we understand that we're a very large originator back from 2006, 7, and 8 of agricultural carbon credits. So those are the various technologies that we use to originate carbon credits as a company.
And then once you've originated those credits, what do you do with them?
We sell as few as possible, Michelle, because we believe they're going up. And I mean that sincerely. We certainly will merchandise into the market to be able to test, to be able to gain fidelity, to be able to gain some good activity and create a bit of a market. But the vast majority of them, we would today want to be holding and aggregating because it's just the market is just simply going up too fast. I believe that the corporations that have set these aggressive goals, and I'm so grateful that they have these great names and great corporations who've set about to do this. I believe that we will not have enough installed traditional compliance technology. We will not be able to switch to renewables fast enough. We're getting there, but it's such a long process. It's a 50-year process to go to renewables. I believe that as a result of that, the value and the reliance on the voluntary offsets will be an essential tool to these corporations meeting their objectives. And as we wake up to this and we realize there's a shortage of these to be able to meet these lofty objectives that have been put forward by those 1,500 major corporations in the world, that this is a great place to be, is to originate them and hold them. That's our view. So.
All right. Well, how many originators are there active in the space right now that do have technology and infrastructure to physically remove carbon dioxide and other harmful gases?
Emerging, there's some good emerging technologies that are doing that. We've been involved in carbon capture in the UK, for example, way back from 2005 on. We built plants in Scotland, we built plants in Glasgow, and we've been involved for a long time in carbon capture, methane destruction as well. So there certainly are methane destruction technologies that have emerged. There's carbon capture technologies, but the difference in our corporation is that we are a technology platform corporation that owns technologies that originate carbon credits. We're the originators of those carbon credits in many different areas: CO2 capture, methane destruction, agricultural, municipal landfills. All of those are all being originated by us. And then I'd like to say we're aggregating is wrong. We're aggregating and we're holding. Yeah. Is what we're doing.
And that's because you think that the industry is going to soar and that the value of these carbon credits is only going to increase. And that certainly seems to be congruent with some of the big studies out there. So, of course, our viewers want to know, how can an investor then get exposure to this? How do you play this carbon credit trend?
Well, there's three avenues to enter, Michelle. I think one of them is on the very top end. You can be the buyer and the reseller. We'll call it the arbitrager of the credit. You can buy the credit from an aggregator and take it to an exchange, and you can try to make money the arbitrage there. So we'll call that the trading market. And there's an evolution of dozens and dozens of new companies that are out there that have secured the capital that want to be traders of the carbon credits. There's aggregators of the carbon credits who go along and they've got some industry knowledge, and they're good at deforestation. They're good at planting trees. They know it. They know the tree planters of the world, and they aggregate those credits and bring them together. That's a more difficult space to invest in, and it's limited. I mean, obviously I'm biased, but really at Delta Clean Tech, our objective is really simple: originate them. Let's build them. We will construct the carbon credits that we need. And that's really where I think it belongs. It belongs in the origination of these carbon credits and the recognition of the new processes that can be applied into mining, into aggregates, into cement, into forestry, into agriculture, into livestock that will ultimately reduce emissions and create offset fungible carbon credits.
All right, so Lionel, as a retail investor, because that's where I'm going with this question, as a retail investor, one can buy equity in companies like yours that are originators of carbon credits, or what are the other ways to play this trend? Can you buy carbon credits as a retail investor on the market, on the exchange, and then expect them to increase in value, buy low, sell high, that traditional approach? Are there ETFs that give you exposure to a range of companies that participate in this space? Give me the spectrum of ways that an investor can get exposure to this booming market.
Yeah, Michelle, thank you. Coming all the way. You've identified all the new arbitrage mechanisms that are coming our way. And of course, being able to put them on the blockchain and to be able to relate a high fidelity carbon credit into the blockchain and create complete and easy transferable fungibility. I think that's the key. How do we get the gold coin, if I can use that, of carbon credits? And then once they hit the blockchain and the ability to have the fidelity to join, and then now we have a high fidelity a blockchain instrument. We have a high fidelity carbon instrument. They've been married together, haven't they? And we've created a new opportunity there by putting them in the blockchain that way. So there's an opportunity there. The individuals, I mean, many companies will just truly do that, buy low and sell high. But we see, when we look at these statistics, we see the ability to generate voluntary carbon credits at Delta Clean Tech. We see this as being our core expertise, and the origination of some of these is going to be so cost effective. And this early mover, the early movers are the ones who will recognize perhaps it'll cost us $2 a ton to generate a carbon credit, and perhaps that carbon credit could end up being worth $50 a ton. That's some of the early mover origination that we offer at Delta Clean Tech.
And you see carbon credits being tokenized and traded on blockchain platforms. Is that currently the case with your company and other companies? Can you buy a carbon credit token on the blockchain?
Just in our case, being implemented now. I'm not sure if any of them have actually finalized that, but that's right in process as we speak. Your timeliness in your questions. This is so emerging as we speak, almost week by week, not month by month, almost week by week. It's such an emerging market, and you've heard it all with the voluntary credits. It's a little bit, it's very frontierish,
right?
And it needs a lot of breathing room early to be able to create the right carbon credits for the voluntary market.
What about ETFs, Lionel? Is there a simple way for investors to get exposure to the space at large?
You know, it's a good point. If I was an ETF in the space, if you and I were running that ETF in the space, what would we put in the stable? What would we put in? And it would be a combination of all of those. It would be a pure inventory, watch it go up in value. It would be an investment in the originators, because they're the ones that'll bring the new frontier in to be able to be put into inventory. So I don't have any ETFs that I can recommend and speak to today, but I would look for a balanced ETF, a balanced one, because some of these silos within this sector are simply going to parabolically soar, and you want to be covering all of those. I think certain types of origination are going to be very dramatic, and are going to be very accelerated in the value they're creating. Of course.
Well, because we said that the space is largely unregulated, that in itself poses some risk. For argument's sake, can authorities just create more allowance, just create more carbon credits, thereby diluting the value of existing credits? Is there a limit to how many credits governments or whichever regulatory authority steps in can approve or issue, for example?
No, there isn't, and that is the purity of the market, of course. And as you said, that is the yin and the yang of the market when we think to it. But there isn't. I mean, at the end of the day, is an investment been made that has reduced the carbon footprint of a process that is in effect today? Has an investment been made to reduce that? And that becomes a voluntary offset that needs to have the fidelity to be able to make it into a trading mechanism and become fungible. So it's new. It's seeking its own regulation to a certain degree as well. So you can see where the opportunity would lie, Michelle.
Yeah, well, it does seem like a burgeoning market. Thank you for giving us your analysis of it. Really appreciate it. Lionel Kambeitz, Executive Chairman of Delta Cleantech. Thanks for joining us here on KITCO News.
Well, thank you so much, and a great set of questions. Thank you.
All right, great. Thank you for watching. Keep it right here.